Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. And if you're celebrating Hanukkah, may you enjoy the Festival of Lights. And at this point, I guess the market isn't cheering Hanukkah. Maybe at some point it might cheer Santa Claus. But again, these are all just sayings on Wall Street. And I think there's too much emphasis on all of them. What you really have to emphasize on is the action and what's been taking place and the ranges and the speed and the violence, because there's been a lot of it. When volatility sets in and when momentum levels get broken, like the 8 and 21-day moving average, which happened over a week ago at SPX 2064, and we're almost, 4% lower, you have to take a little caution. You have to change. You have to get out of the way. You have to look for H-cell setups. You have to do whatever it is you do to be in a better position. And if it's too fast for you, like we've said over the course of the last week, cash is a position. So this morning we came in, there was a lot of volatility. Okay, we were oversold. The oscillator was minus 50, and I was looking for some kind of tradable bounce, looking for a little strength in the XLE or the OAHs, see if Russia can go from red to green. And in the first 2 hours, there was a great trade, fast and furious, obeying all the rules. If you go to the SPX, you will see, this was the SPX in the morning. So first things first, what I wrote down was the prior low, okay, for the red dog reversal, and that was 1982. That's a level I put on Twitter in the morning. That is the pivot. We opened up, went a little bit below it, and then right here made a higher low, okay, and you had an igniting bar. This is an igniting bar. This sometimes ignites a new move, especially if you see commitment to it. And it held the top third of this range. So even if you weren't fast enough to catch this igniting move, or maybe you were able to cover into this because you're allowed to cover shorts also and then reshort into resistance, you then had a nice little flag pattern. And right here was when I think a lot of us got aggressive. You saw some strength in the XLE, some strength in the OAHs, and lo and behold, this cleared, what was somewhat of a downtrend from the prior afternoon. So before we get into it, I also write down resistance. I think one resistance was like 201.20. The next resistance was 202.50, which was a prior pivot, which you could also look at the chart that I post every morning. So that's your roadmap. Where do we go? Resistance 1, resistance 2, and then a resistance 2. Why not take a little bit off and then see what's next? So anyway, you go back to the chart and you look here. So from the first igniting, first move, higher low igniting move, you could have even gotten right there. And then from here, you had another bull flag that held. So now from this move, it's still holding in the top third of the move. So it's fast and furious until finally it hit, that 220 level where it broke down from. And by this point, I think a lot of guys sold strength, including me. I think I probably sold my strength somewhere a little early right here. So then from there, what took place? You had a little bit of a pullback. Okay. From here, I know a lot of us were trying to buy the dip. Okay, because you know what? You had a big move, day one. Why not buy this dip? Okay, from eyeballing it from here to here, this is the top third. So in this, I probably had a little bit more size than I even had over here, because I thought there would be some commitment to it. Okay, and then what happened? Okay, it went a little sideways and broke. So right there, that stopped me out. Okay, if we were going to be fast and furious and continue to upside, this probably should not have broke. Some people said, let me give it a little bit more time, because again, this might be the top third. Who knows? It could probably even get to this level and still be okay, which is where it broke out from another level. This was the extra froth. And then it got to here and broke that. So right there, if this was going to be any good, this is when, you had to say, I'm done with it. And I know for me, I lost at least half my day, after this move, trying to buy this dip because I had a little bit too much. And then I just got out of it, but I kept at least half my day. So anyway, with that being said, then all of a sudden the day keeps transpiring, okay? And then now there's a small double bottom here, okay? A small double bottom right around 1990, okay? At that particular point, we were trying to figure out, is that going to be a double bottom, and could we bounce off that and close okay? Or does it break through that and just cascade and bears be in full control? And at the same time, you had Google on the lows, you had Amazon on the lows, Baidu weak, Tesla weak, most of the banks red. So it felt as if, why would we rally? Things are still broken, okay? But it was like a bit of a coin toss. And then if you were trying it right here, okay, go back to the chart, at least you had a level to trade against. And it was still holding, and then, it broke a little bit below, and then a lot bit below. So all in all, this early morning trade turned into, basically a round trip short. And if you go to the spiders, that's what we trade. Let's see the peak here. The peak here was, look at that, 202 dot, what was that? The high there, 40-ish almost, and that lines up right with this resistance, which was the prior, which was resistance 2. So it blew through resistance 1, so it probably knocked some shorts out right there, and then that was your sell some into resistance 2. See what's next. Okay, and if you were in here with us, you probably heard some screaming, because once that took place, some guys that were buying the dip had a little bit too much and probably got hit out somewhere around here. And then I'm sure they're feeling a little bit better, as if you keep buying, and that could put you a little bit out of business, especially if you buy too much. So it's been very violent. The tape is very violent, and you have to take your trades, and you have to know where the risk reward spots are, and be very focused. I know for me, I tried being in BABA and Apple, and the trades worked in the morning, and then, Apple was weaker, felt like it was dragged, and too much weakness on high beta, so I got out of that once it broke back below 108. And then BABA, I just went with some options because I still like the pattern, but it could change just like Facebook changed. So real quickly, you go back to the daily chart, and that's what we'll do here. We'll go back to the daily chart to see what does the spiders look like now. And this is when the 8-day and 21, this is when the 8-day got broken. Time to switch some gears. Here's when, we broke below the 21-day, tried to reclaim it, broke below. That was your second sell signal, and now, we're still heading down. Okay, and the 200-day is right here, and I guess the 150-day is right below around 197.53. But all in all, this loose, wide, whippy action, is definitely not conducive for sitting in things. No reason to sit in things. We are in the trading business, not to sit in things. You know what? We like to sit in things when you have a V bottom, okay, and you hold above a gap and you start riding the 8-day, which is what the market did for the majority of late October into late November. And then here's when it started getting wishy-washy. So anyway, just remember this, okay? This was on 12.5. The S&P nudged to a new high. Another thing we talked about was the Qs. The Qs, okay, on 12.5, right? What is that? Is that 12.4? Here's 12.5. Did the Qs nudge to new highs? No. First time in a while it didn't lead the tape. That showed you relative weakness. So that was another clue that perhaps you might want to reduce some risk, especially when it broke this upper wedge with relative weakness, broke the 8-day. That could have been your out right there, and then it could have just turned into a tactical trade. And now today, tried to be strong and just broke below the prior pivot, closed on the dead lows. And this to me still is, not, it's just an avoid and a tactical trade. Got to hand it to Laz from Off the Charts. I think most people that are in the VTF also subscribe to Off the Charts, and he tends to have a little bit more of a negative bearish bias, so it's a good yin-yang where he posts all these short trades. And today he covered half of his price line, okay? Look at this chart. This was your gap down, couldn't really fill most of it. I think I'm not exactly sure where he got short, but this is when this lost the 8 and 21 day. Good job, Laz, below all the moving averages, broken. Maybe he even did it there. Tesla, I know he posted that short. He might have 25% less or left, and that was when it broke the 8 and 21 day right there. That's when momentum left, and then more momentum left when it broke the 200 day. This morning I talked about, as an active trader, you want to follow a trend in being a portfolio approach in swing longs above the 8 and 21 day. If the 8 and 21 day break, you get out, you get neutral, and then you get tactical. But if something breaks the 200 day, okay, it's not even an investment. Then you have to say, okay, this is not investment quality. Institutions are selling it, and you never know when it's going to be back and change. Just like all the oil stocks and even Russia, you could look at every oil name out there, and you'll see they broke the 200-day 3 months ago. So they've been avoids. You haven't seen oil names really on my morning call. This whole year, I actually, my 2014 thesis, I didn't talk about oil names because they weren't acting well. They weren't leaders. I don't think I tried to buy oil once. I still haven't tried to buy oil. I probably should have bought a little bit today, but I'm not sure it's going to be sustained. But anyway, you go back to Tesla. I've been talking about how this should hit like 180-ish. How it gets there, I'm not exactly sure. But if you're looking for a trade to the short side. This has been to the short side, and this little head and shoulders pattern to the downside. It's probably getting close to the measured move. So at this point into the weakness, you always want to cover some, but you know, it definitely still looks like there's more room. I know I tried buying Google once or twice, had little paper cuts, but this has been really weak. Okay, I tried buying it. I think on this day it looked as if it might break out. Okay, it had a nice little wedge right into a potential downtrend. Okay, so I was thinking maybe it could be stronger. On this day I got stopped out. I was like, oh, I'm done with this. It's below the moving averages. I'm done trying to anticipate a break above this downtrend. And you know what? Nice move, Red Dog. Look at it there. And I'm not sure it went off the charts, listed it as a short, but I know they covered half today, and you know, pretty weak when you break a prior pivot. And now look at that, closing on the dead lows. So you know, below all the moving averages, things that you avoid until they change. And then now you have a gap all the way over here. We'll see how it handles that. But this broke some pretty serious levels. If it doesn't take that back quick, you know what? It's still in a void, just like Netflix. I think Netflix broke the same type of level. Netflix, you know, was listed as a short and off the charts. You know, so again, if you're looking for short ideas, Evan's been on top of that. Boom, there's your nice short. Held halfway, and it's been slowly just riding below the 8 and 21 day. So same way you like to ride it when it's above, you know, to the long side, and then boom, it breaks, you're out. When it's below it, you just stay with that trend until the trend changes. And this actually broke below the pivot from earnings too. So at this point, you know, Netflix has been broken, and you know, there's no reason to be in things like this, or at least holding them when they're below all the moving averages. It's weak. Negative trends. Okay, here's your next point of reference. It comes closer to 300. So we'll see if there's something tactical to do there. But all in all, you know, look at this. Rode the 8 day. Stay with the trend. Breaks below it, you get out. Same thing here. Look at this move. I remember this move was a great one. A great move with lots of different areas to buy. Okay, this is when it changed and reclaimed the 8 and 21 day. And then from there, rode it pretty much the entire way up until you had this exhaustion gap, a flag that failed, and then it went back below it, and then it became a choppy mess. So that is how you stay safe in a trend when it's above the 8 and 21 day. You don't buy it for more than a trade if it's below it. And chances are if it stays below it, it might even be a good short if that's what you're looking to do. Amazon, remember that day? They sold Cyber Monday. This is all you needed to know on Amazon. Remember, it was trending. It was sort of nice to be with. Above the 8 day, something to do as a trader. Boom, that day it changed. That was the day everyone's like, oh, is there news on Amazon? What's going on here? No news. The market's telling you it just engulfed the 200 day. It's below the 8 day. This trend basically broke. It's now not a buy. You know, it's an avoid, it's a short, or be very, very tactical on 3 and 5 minute levels. And here you are, you know, we talked about this recent pivot, and now it broke below, and there's really nothing or no points of reference down to here. The banks, you know, I got to say we got kind of lucky there, but I guess it's our rules that got us lucky, because when they were ready to break out, we bought day 1, added day 2, sold day 3, was done with it for day 4. People are like, oh, it's still going, why don't you just trail it? You know what, I got out of it, and then those wound up turning into breakout failures. You look at something like Morgan Stanley real quickly, okay, if you remember, it looked really good. Remember this tail right here? Here was your, you know, day 1, your add on the breakout, and I think I was out here. So that was a nice 4-day move, and then I went to see what's next. Had another up day into a tail, so I missed that, and then, you know, it was still holding. I'm like, you know what, I'm not going to go back after these things. And then what did it do there? It broke the 8 day quickly. So that is your out. No one really thought this would happen and would continue to the downside. Same thing with Goldman Sachs. Goldman Sachs broke above right here. Okay, you had your tail. We talked about it breaking above 192 as a long trade. I think I was long here, and then I was long even more when it broke above this 192. And then into that move, I sold it. Nice little trade. Above, I'm like, it's extended from the 8 day. I want to wait for the moving averages to catch up. And then got downgraded. Remember that day? That's when it got a little wishy-washy again. And then, you know, this should have been your out if you were still trailing it. So breakout failure should not happen. And now look where it is. So, you know, you have to move fast when you're an active intermediate trader. Okay, and if you're, you know, longer term and you were short that, I don't even know if you would have been able to cover, because at the time it did look good. So again, above the 8 and 21 day, you try and be long. You look for tight patterns. Use a tier system. They happen to go up 2, 3, 4 days. You always sell into the third and fourth day, and if they go up 5, 6, 7, who cares? Okay, sometimes I'm like, I wish I still had it, but more times than not, you'll be safer and you'll have your trades booked in the bank. Today, you got a little bit of a move in the XLE. I'll say that I was in it early. There was a really nice trade here. This was your first move reversal, and then it gave you another trade above this. Okay, and then finally, again, like we talked about in yesterday's recap, you want to measure commitment. Okay, if you thought perhaps it was resting here with a nice flag pattern, letting the 8-day catch up, if you were really tight, you would let 75.84 be your stop. And once it broke that, you could have been out of it and said, you know what, it was a really nice trade. I don't trust these things. They're semi-broken. And then if you were someone else and said, okay, you know what, they just had a big move, from the lows all the way to the highs. Let me give it to this. I don't want to be so tight. And then it held it, bounced off it, and then what did it do? It broke it right there. That would have been your out. So number 1 out, number 2 out. And then I'm not sure where it closed all the way down here. And so tomorrow's another day. But all in all, if you're trading a morning trend, you want to measure commitment to it. Here's one spot where it lost momentum. Here was your second spot. So you had 2 ways to get out of the way. And now I'm not sure. Oil reversed also. Not sure, what it means, but you had the first green day. We've seen a green day before. Here. This one, has a little bit of volume attached to it. If you go like this does look somewhat like capitulation volume. Look at the size of this volume. It was as low as 53 or so before rallying up. So if you're long some oil, okay, don't just if you made a lot of money intraday, only hold a third to see if there's any commitment. Same thing with RSX. A lot of us made some decent money in Russia. Okay, you had a negative move. It traded above a prior low, so this was a good spot to be long. And then came off a little bit, but it didn't sell off towards the end of the day with the rest of the market. And look at the size of that volume. So it's still below all the moving averages, but this ingredients is a little capitulation. You go to your 5-minute chart. That's what we were navigating. And here was, I started getting involved in it right here when it broke above this area. And then, boom, look at that nice trade. Okay, and then it came back in, and Sperling was all over this thing, and it closed pretty well for itself. Not sure what that means, but a lot of volume in the end of the day. Maybe it means the U.S. is going to lift the sanctions up. I think what changed the tape was when the President Obama said he's going to sign the legislation for sanctions, and it came in, but this ETF didn't. So at this point, hopefully you covered some shorts. Look where the 200-day is. Look where the real breakdown was. The real breakdown was all the way up here, or when it broke below this support. So at this particular point, if you're riding this down, don't be a chasa. If you watched Scarface back in the day, you know what that is. Hopefully you're covered, especially when you want positive. And if you have a third left over long, it makes some sense considering it was a nice reversal on volume. So with all that said, I think I might have said with all that said a few different times. So with all that said, tomorrow's Fed day. I don't know, because of the volatility, if they're going to keep the language considerable time. I think they need to have their credibility and change that somewhat, so they might be very picky on their words. Perhaps they're a little bit more dovish than they would have been if we were at highs, as far as hawkish. Looks like the bond market's telling you that rates aren't rising anytime soon. that was probably the opposite side of it. So we'll see what happens tomorrow. Today there was a rally. You could have made money. You could have made money shorting the rally into resistance. There was lots to do, but there was that fine line in whether you were giving your day back or whether you were booking a portion of it or whether you got hurt. So that fine line is getting thinner and thinner each and every day. The way you could make that thicker is by preparing, having your levels, being even keeled, taking your trades, only trailing a little bit, and being very flexible. Because if you came in short and you shorted more the whole way up, who knows if you would have made it into resistance too. Almost the same thing that happened last Thursday. In the same way, if you came in long today, maybe on that first move down, you're like, I can't take it anymore, and then you missed the rally up. So lots of different ways to get spun around. And at some point, there'll be more clarity, and we'll figure it out then. But at this particular point, market has a big enough range where you don't need excessive risk, low gross, low net, only compelling trades, and preparation. And once again, if you celebrate Hanukkah, spin that dreidel once for me. Have a good night.